Hello student, welcome back to Indian Business School. Now we have frequency of determining inventory balance. So normally ending inventory are being calculated once in a year. Okay, so no need to do keep on calculating ending inventory. That will not add any value to your company. Okay, and but still monthly, quarterly, and annually people are doing. It depend on company to company and their intention. Okay, so two major points is with regard to FIFO and LIFO. FIFO periodic system at the end of the period, if we are going to calculate, so what would be the method we will be applying? So sum of the beginning inventory, whatever it is, maybe 100, and purchase during the year maybe 1000. Okay, then we reduce our ending inventory, so we will get the cost of good sold. Okay, as you know, in FIFO what we have first in, okay, the oldest item in into the our inventory will go out first. Okay, so what will you have? Latest price we will be having in the our ending inventory. Okay, so the latest price would be high cost. Okay, the high cost you will be multiplying by the quantity, that will be your ending price, that you will reduce from this, then you will get your cost of goods. So you can see the same thing has been mentioned, consists of most recently purchased units. So most recently is your highest unit price. Okay, then your calculation is done. Basically that they are trying to say, with regard to LIFO, just opposite the latest inventory. So you will be having oldest inventory we will be having in our ending balance quantity. Okay, whatever the ending quantity of inventory we have, we will be having, that will be having the oldest inventory, so their price will be low. As you can see, composed of oldest unit and including those beginning inventory plus unit purchase, beginning inventory plus unit purchase minus ending inventory is equal to cost of goods sold. So basically this is your total inventory, and then for this one you have to calculate using oldest unit price and then multiply by the quantity, then you will get your inventory value, that you will reduce, you will get your cost of goods. Okay, so this is how the process is working. Okay, now we have very important point to discuss with regard to perpetual system. As I told you, with regard to weighted average, that time I have explained every single, when we have purchased an inventory, when we sold to inventory, so that time whatever our purchase price, that price will be applied. Okay, first purchase price. Okay, then that price will be reduced from here. Okay, then again if you purchase one more inventory for another price, okay, so that price and quantity will be added here, and then again will be divided by whatever the total price, that will be divided by the remaining quantity. Okay, again whatever your weighted average cost will come, that cost will be applied to your new sales. Okay, whenever you will be selling new, so every time when you sell, your inventory price will have to be updated. Okay, and whenever you buy or whenever you sell, your price will be, for sale your price will remain same, but if you purchase any of the new inventory, that time your inventory will be keep on updated. So that is why ERP system is being used. So ERP system automatically renew the average price of every time when we buy and sell. If you are still working in any company, you can go and check into that system, and you will see that the price which is flowing, okay, the price which is being purchased, that may be $10 for 10 unit, but when you see the sales price, that time first maybe they will be charging 10.37, later on maybe, and two quantities sold, then you might see they are charging 10.52 into two quantities. So every time when you are selling, whatever the weighted average cost is coming based on the quantity keep on increasing and getting down. Okay, and an inventory value, whatever the inventory value, they are dividing by this quantity, and whatever the weighted average is coming, that average cost is keep on applied by that ERP system automatically. So this is how a perpetual inventory system is working. That is most accurate, I would say, but it is also most continue tracking and most difficult to, when we are doing in Excel sheet or something, then it become very difficult. But in system we can do it very easily because system has to do it. But still reconciling this kind of thing is also one of the pain area for all the uh, finance department to check it whether they are tracking weighted average correctly or not. Okay, I hope it is clear to you. So with regard to this perpetual inventory system, FIFO, for LIFO also we can apply this kind of perpetual inventory system. Now the another point is with regard to FIFO. So in FIFO perpetual system, as you know, perpetual system always for every single sale they will change the price or update the price. Okay, but since in FIFO we are first in, first out, which is the first in, not latest in. First in means oldest in. Okay, so whatever the oldest price is, that price will be applied to your cost of goods. So that is why in perpetual system, whether you change or not change, it will not impact anything. Okay, so if you see that concept, no difference between the periodic and perpetual inventory method. Okay, so whatever the method you use, periodic or perpetual, but result would be same. The cost of good be same and your ending inventory will be same. Okay, so I think I'm done for the day. See you into the next session.